Yo, welcome to today's class on pivot points. Woo! This is essentially the secret to trading because pivot points, along with liquidity runs, are basically all you need trading, or all you need to become professional traders. If you can master this, you could pretty much do anything and remain consistently profitable. Now, there are a few things that I should probably warn you about if you're new to trading, which hopefully you're not, because this is a video you should not be watching unless you've watched all the beginners courses and, hopefully made a few trades on your own, which I'm assuming you have, especially if you're in the mafia. Okay, so there is never going to be a 100% win rate trade setup. Trade never. It'll just never happen, right? I'd say the best probability, which, thinking in probabilities is another secret to trading, which we will have another video on later to train you how to think in probabilities, because that is also one of the most important things. Because even if you have the best strategies, even if you play the pivot points perfectly, all that stuff, if you don't have the trading psychology behind the strategy, then you are not going to make any money. So, with that being said, we are never going to have a 100% win rate in any trade. I'd say I don't even know if 90% is possible, but like an 80% win rate on like a setup, it's possible. 90%, I don't really think so. I mean, there are some super sick setups, but as you know, the market can be moved by one person. So even if the setup is perfect and it's worked 1,000 times before, that one person that has, mother load of money could completely destroy your setup and move the market. So, yeah, there's just no way to be, even 90% correct, because there's always going to be that one, two, three, four, five people in the world that have enough money to actually move the market and will fuck you on purpose. So, with that being said, now that you know how the market works, and we will get into some more in the later videos, let's talk about pivot points and liquidity, right? So, what does the market like to do in general? It chases liquidity. Why does it chase liquidity? Because there's ways to, enter big positions if there's a lot of liquidity. So, people will chase the liquidity to either enter their own trade, get out of their own position, or, you know, just fuck people over. Because that's also what the market likes to do. It likes to screw people as much as possible because it's very it's fairly there's a good chance you can make a shitload of money if, you know, they weren't out there fucking you all the time. So, with that being said, let's take a look at this 15-minute chart. And we're looking at the 15-minute because, once we go into lower time frames, our pivot points will stay there, and we'll be able to see them on lower time frames and possibly remember them. Now, I did clean out my whole chart. I usually have a ton of points, but right now, where do you think a major pivot point is, right? It's basically where the market is right now. And today's the 21st of February. The market is literally trading right at a major pivot point. And how do we know it's a major pivot point? Because the markets came back to it so many times, right? We see one time, two times, three times right there, almost four times. NQ likes to sweep just a little bit above it sometimes, and then sometimes right through it. But as you can see, it's basically chasing this liquidity right here, probably from orders that were not filled right here, that were not filled right there. That it's just a bunch of resting liquidity here. And now we don't know that there's liquidity there without the level 2 data, but it's pretty safe to say at this point right here, this pivot point, there's going to be liquidity there. And, we already blew through it yesterday. Um, and it didn't obey it at all. That doesn't mean that it's not invalid, right? Because right now we're hovering around it. So now we could expect a decent move up or a decent move down, which I'm thinking down because we're entering a bear market in my opinion. But with that being said, the market will always chase liquidity, no matter where it is. Now over here, what are we gonna do, right? Because it's all-time highs. So how are we gonna plot pivot points there? We can't really, right? So when the market's at all-time highs, it gets a little tricky. You kind of have to just look at the liquidity on level 2 and see where liquidity is sitting, and if it's even gonna obey. Because I mean, you saw it, like when we started going up, it just could not come down. All the shorts got fucking wrecked for weeks. Look at these monster pumps. Like you just could not short this whatsoever. And there were no levels on this run, so you didn't know where it was going to end. I mean, you could hit it with the fib to see where it could be, the standard deviation points, but I mean, it's at all-time highs. It's just a little bit harder to trade and kind of get levels and create a hypothesis on what's going to happen. So you kind of just got to be careful and protect your position when it's at all-time highs. Now, I don't expect us really to go back to all-time highs. I mean, the market does love going up just in general. We'll have these sharp drops, but in general, the market wants to go up, right? Because everyone's depositing 401ks in there, etc. Um, but when the bear market hits, the bear market hits. Like, if we look at the daily right now, check this out. I mean, we're kind of chopping like crazy on the daily. Like this is kind of messy. Like this is a normal daily, but this right here is it's just kind of just wild because we were at all-time highs and because I think it's just overbought. So that's what makes me think we're gonna come straight back down. Um, and you can plot pivot points on the daily as well. I actually prefer that because the higher the time frame, the more reliable the pivot point or the area is going to be, right? So let's say like what is this day? 31st of January, right? This was a major point. It wicked down, so we'll go above the wick. On the daily, it's going to be giant moves in person, right? So I mean, this is what 23 to that's 17 points in that little wick. So I mean, when you're plotting on the daily, just kind of keep in mind that like that line is not like where it's going to stop or where it's going to reverse or it's not going to be exact. Everything in stocks and trading is ish, right? It might stop here ish, at 40, 50 ish. And, that could be 10 points. So, I mean, you just got to kind of, keep in mind that if you are going to enter on a pivot points, like I always do, if you watch me live, I always enter on pivot points. Pretty much always, unless there's a badass setup. And why do I do that? Because the chances of a reversal are slightly higher than 50-50, right? Because, we 50-50 is not a bad, win rate or probability of making profit, right? It's not bad. But if we can go to 60%, 70%, 80%, that's obviously much better, and we'll like our odds a little bit better and have a chance to be more profitable. With that being said, you know, okay, so we're gonna plot this pivot point right there at what 36-ish, 42. See, it's the daily, so it's a little choppy or it's a little hard to see. But if we go down to the 15 minutes and we go back to this day where we just plotted it, the 31st, we'll see that it just straight up nosedived. Boom. From 483, 483. That was a 260 point dive, right? And it just abruptly stopped right there, reversed, and boom, it went right back up, right? So what are the reasons it chose to go right there, right? Why did it choose to just randomly nosedive for 200 points in about 30 minutes? Yeah, because we're on the 15 minutes. So in about 30 minutes, it dropped 200 points and then abruptly stopped, got wicked up, tried to go higher, couldn't, got pushed back down a little bit, swept the low, and then we started the reversal, right? Which is another strategy to NASDAQ that we'll go over again later. So what is the reason? Boom, it's because of this pivot point right here. So if we didn't chart it on the daily right there, we could have looked back to Friday the 19th of January, so 12 days before, and we could have plotted this level right here, right? So this is the 19th. Let's go back to the daily to see how we could plot this, or if we could see it. Okay. Yeah, so this was the opening range of the day on the 19th, along with a high from the previous days before it dumped off a cliff, right? So we could argue that this is a pretty good level as we topped off there, fell off of it, and then we also stopped this day at that same level, and the next day we're still bullish, so we just blew past it, right? Pivot points will only be obeyed for so long. The more they get retested, the less likely they are to hold or, be serious indicators of something that's going to happen. Because, okay, so I said that wrong, because that really only counts if it's like intraday or, basically the same day. Because, every day people are going to be adding buy orders into the market or sell orders or whatever they want to do, right? And as we can see right here, we hit this level right there, and then we blew past it, boom, and then we just dumped right through it, right? So within 6 days, I mean, chances are there was still some liquidity there. We're just so bearish and just ripped through. But my point is that in the same day, the more times it gets tested, the less liquidity that's going to be there, right? Think of it like a wall. They tried to dump through it, they couldn't because there was a wall of liquidity. So the wall of liquidity made all the sellers bounce off of it, right? It was a brick wall. The sellers tried running through it, they couldn't, bounced off of it, went straight back up, right? And similar thing happened right here and right here because there was so much resting liquidity. But these were days apart. Like this is 1 day apart, this is 3 days apart. So, it wasn't the same day. The more times that a pivot point gets tested generally means that it's more likely to get ran through because, nobody has unlimited liquidity, or like nobody wants to just keep on putting buy orders in the same exact place if it keeps on retesting, because chances are at some point it's going to break through and then that person's going to lose money, right? Which could also be taking profit too. Like liquidity doesn't just mean that there's buy orders, right? There could also be buy orders from the sell. You know what I mean? So if someone shorts right there, boom, 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 like, oh, this is a good take profit. So they put their buys right there, and boom. So it's not just people looking to get into the market; it's also people looking to exit the markets. And that's kind of what the market likes to do, right? Like everyone and their moms want to look at points to maximize profit, right? They don't want to hold for 10 points unless they're a robot, like a high frequency algo, right? So everyone's going to be looking for certain points where the market showed resistance and that has a higher likelihood of reversing to get out of their position if they want to maximize profits, right? So we could assume that on this day, a lot of people shorted right there. Boom, boom, boom. They seen that this was a level from, the previous days. So they were like, okay, well, we're going to let our short run to where there's a very high likelihood that it's going to reverse on us. So we'll take profit, we'll put our limit orders there, and we'll take profit right there, which will turn into a buy if they're in a short, which will help push the market up, right? So what did we see happen here today? We saw it sitting at this key level right here, which has been obeyed for multiple days, boom, 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 until it finally broke through, and then over here it broke through as well. But we're consistently seeing wicks going here and then rejecting, right? So this would be another pivot point on the 15 minutes, right? So what we're basically going to do is just set up a bunch of pivot points to help us in our trading later today. And we can see right here, the market has came here multiple times, boom, boom, and bounced, and even bounced off of it yesterday. Yeah, literally yesterday. It came to this level, bounced up, boom, and ripped higher. Actually, I was in this long right here, and I made $10,000 because we had this pivot point mapped out. So what are we gonna do? We're gonna grab the line tool, boom. We're gonna slap another line right there. So these are all major points where the market has a high likelihood of returning to or bouncing off of and reversing, right? And what trades typically make the most money? Catching the bottom or the top of a reversal, right? So let's say you saw this dump, you missed the short, oh my god, it's hitting my pivot point, I'm going to take longs, boom, boom, and let's say you held, for 6 days. Well, holy shit, 558, you just made 600 points there, bud, on whatever you had. And, there's just no way to make bigger returns, in my opinion. If you're scalping, it's going to be a tough one. I've always made most of my money from just patiently waiting and just holding for pivot points or reversal points to take profit. Right? And once you start like scalping and like making micro trade or like super fast trades, trading on the 5-second chart, stuff like that. I mean, it's just a high likelihood we're just gonna get ripped randomly, right? Because the market's unpredictable and one guy can just completely screw your trade, dump it off a cliff, and let's say you couldn't sell or you didn't have a stop loss, you just got ripped through an hour, 3 hours of scalping. So I barely even do that nowadays. I'll do it to protect my position and to manage risk a little bit, but overall, trading reversals are going to be one of the most profitable trades out there because they move the most. And if you catch the bottom of a reversal on a nice trend day, golly, you just made a decent move. You know what I mean? I mean this right here, we caught it at what, like around 78, boom, and we sold at like we sold a little bit early. We sold around 57, right at this pivot point because it was a pivot point. So we took profit there and we made $10,000. And then what happened here? It ended up ripping through because there wasn't enough, liquidity to stop it. So it ripped up, boom, dumped off a fucking cliff in 15 minutes, retraced back up, and then pushed back up, right? Did we want to stick around for that long? We could have, but then we could have risked, getting caught in this dump, panic selling, and not catching the move back up. So what do? We took the profit a bit earlier to make sure we keep it. Because I can't tell you how many times where I'm deep in profit and then boom, random dump off a cliff, all my profit's gone, and I end up closing for a loss. Or I'm sitting there thinking, oh no, it's going to come back up, and then it just dives right through the ground and I blow my account. It's happened to me so many times that, it's just not worth the risk. It's better to leave money on the table than to get fucking steamrolled trying to, maximize profits. Because you never know where it's going to reverse, right? Like 613. I mean, could we have predicted that it was going to go right to 613? I don't really see any levels that support that. It's pretty random. We have this zone here, right? But I mean, like how can you guess that it's going to go up to there? right? How? You just can't. And it's because the market's uncertain, right? You never know what's going to happen. Because this could have been one billionaire buying all this up, made it fucking skyrocket, and then, everyone thought it was overpriced, so they sold it back down. You just never know. So the best thing we could do is, play off our pivot points for entries, and then use our fibs for ideas of where to take profit, right? So, so here, for example, we have our manipulation candle, and then we have our giant rocket right there, right? So on a bearish day where it just dumped off a cliff after a little morning fake out for nearly 300 points, we oh shit, I moved it. We were looking for a reversal play because we missed the morning dump, right? It's unfortunate, but it happens. You miss plays sometimes. But luckily, we were looking out for a reversal play, and we caught it. And why did we catch it? Because, if it's gonna dump off a cliff, then that means a ton of shorts are sitting in profit, and more than likely they're holding, right? Specifically the options players, the 0-day expiration players, where, a move like this with $30,000, that's over $100,000, maybe $200,000, which I have made in one day trading SPX 0-day expiration calls. Short days, I would make the most money, and then, when I first started, I would be up like $100,000 profit in the trade, right? But I'd be like, maybe it'll keep going down. And what does the market do? Boom, it slowly fucks you sideways over time, thinking that, making you think that it's going to keep dumping, because these are some vicious drops. If you traded this day, they were vicious. 2 minutes, 40, 50 point drops just to go right back up. So, I mean, there were indications that it was gonna keep going lower, but what does the market like to do? It likes to fuck you as hard as possible. So what did it do? It made it seem like it was gonna dump off a cliff and keep going lower, but it didn't. To slowly grind back up, push these 0-day expiration contracts to the theta limit, which theta means it's time decay, right? So slowly these guys are losing money on the way up, plus they're losing money from time decay. So even if they caught this exact tippy top with puts on options, down here they're sitting at a ton of profit. Maybe even similar to right here. It's probably less profit here than it was here because of the time difference. But by over here, even if they bought in way at the tippy top, by this time they're probably negative if they were holding the whole time. They're losing money even though it didn't make up that entire difference, because it took so long and it didn't go down anymore, and it wasn't as volatile. Over here is pretty volatile, but volatility is another thing in options where they're hard to calculate because of the Greeks. But theta, fairly easy to calculate. They definitely were red if they bought into the tippy top here, because so much time went by and the trade went against them. So, that's what the market wants to do. It doesn't want people to become millionaires in one trade, or, make mortgage in one trade. They want to give you the opportunity to do it, and then they want to potentially take it back from you, right? Or they want to chase liquidity, which it did, right? So we had our pivot point from, weeks ago, because this is what, the 20th of February, from, month ago almost. We had our pivot point right there. So that's where we were looking to potentially get a reversal, because why? Because it was a pretty strong level. It touched 1, 2, 3, 4 possibly, and then hovered around it. So there's so many touches that you could tell this is a pretty strong level. And some levels are weaker than others, right? Like this level right here, it touched once and no, twice. I mean, it's plottable because, we do have a lot of empty space, so we might as well just in case, you know what I mean? Because you never know if it's going to come over there, and, it could be weeks from now. And if you don't have a line there, then you will never know about it. It'll just be blank space, right? And you'll have to come back and chart it once it gets in that territory. So we'll just chart it now, and then, in a couple of weeks, chances are we might even forget about the line. But we'll see the line, I'll be like, oh, I don't know why it's there, but it's there for a reason, right? Because we just charted it, you know, weeks before or days before, whenever it comes into play. But chances are it will come into play at some point. So, it can get a little bit messy, but keeping the pivot points on your chart pretty much always is something that I like to do because, a month from now, why the fuck did I put that line there? But sure enough, it gets obeyed. So I probably would have taken a trade off of it and, potentially made some money. So, I mean, it can only help. I mean, it could get a little bit annoying with a shitload of lines, but I think it's worth it. So, I mean, it's up to you to decide if you want to have a ton of lines or if you want to have just a handful, right? So let's keep going because I like a ton of lines just to always know that there's the chance that something could happen there. And this level right here, it's not crazy strong, but it's been tapped a few times. It's somewhat strong. And we've seen some reversals here, a giant dump over here, just to blast right through it. So I mean it's a level. It is. Because the tops of the candles touched it multiple times and a significant move happened afterwards. And it doesn't just have to be, tops of the candles. Like we could also slap a triangle, in certain areas. Because, consolidation zones, I mean, these are kind of giant, right? But like over here, like I mean, you don't really want to. I mean, you could, but it's just such a big area that it'll be hard to, like let's say we put this here. Okay, so we know that's a zone, right? Let's bring it down a little bit because right there. Okay, that's a zone, great, right? But it's also a 60-point zone. What are you gonna do with a 60-point zone? You're not gonna be able to be that accurate, right? But I mean, it's a good zone to have because it's a potential reversal or a potential consolidation or reversal zone where you consolidated, dumped, consolidated, blasted, dumped. So I mean, you could do that, but it's just such a wide zone that I don't do that. I don't think it's worth it because I want to be as accurate as possible. Um, but something like this, it's a similar size. It's slightly smaller, but I mean this is a huge zone. Like if the candles come in here, like 1, 2, 3, 4, 5. I mean there was 5, 6 times where it lingered in the zone and dumped off a cliff. So you could potentially do something like that if you wanted to as well. This is like a pivot zone, but personally, I don't really do that. I'd much rather have narrower entries with, you know, tighter stops, right? Because if I'm gonna enter, in the zone, I probably won't have a 30-point stop loss. It's kind of a lot. I mean, I might, but chances are I wouldn't. So I would wait for it to get around this line because remember, they're all ish, right? This line is at 76, 776. Let's give it 10 points wiggle room because New York loves to move super fast. So anywhere from 65 to 85 to even to 93 like this candle, it's that's a proper entry. I mean, you might see some drawdown, but if your market sentiment is right and your bias is right, then a 20-point drawdown, 15-point drawdown, as long as you size appropriately and you don't over leverage, then it should be a great risk reward trade, right? So you'll go into drawdown 16 points here if you took it exactly at this pivot point, and then let's see this day you entered, boom, you're in barely any drawdown because technically we wouldn't have known about this level. But let's say, okay, let's say we entered on this wick up, or right when it hit this pivot point, we entered right there for a semi double top, which is not really double top, but it's close. It's close. So let's say we entered at 34, boom, it shot up to 52. That's what, 18 points? You're like, oh shit, you're probably panicking, right? And that's something we're gonna have to talk about in the market psychology part because going red is okay. The market needs breathing room. It needs to be able to, shake people out of their positions, like hopefully not us, right? Because we're gonna be sitting there holding for, maybe like this level. This would be a bit of too big of a loss. So I mean, you could kind of see like if it was gonna keep going up there, you might have got spooked out. There's a small chance you could get spooked out here. Um, but let's say you don't and you keep like a 20-point stop loss, boom, you wouldn't even hit the full 20 points. You would have gone 18 points in drawdown, and then you would have caught a fucking massive cliff dive and potentially made 200 points. So this goes back to, reversals being the biggest plays out there. Where else are you going to get a 200-point move? I mean, if you decided that, oh my god, this is a bull run. If it breaks this high, I'm going to get in. Boom, you got in at like 44. Congrats. You made less than 100 points, right? But if you caught the top of the reversal, which, the win rate on catching the very tippy top, very bottom of the reversals, a little bit hard, but the winners do pay off if you could hold through them. It's enormous. The winners are enormous. That's how I've made $40,000, $60,000, $240,000 in one day, because I'm consistently hunting the pivot point reversals. And if it goes against me, I'll get out for a small loss, hopefully. Um, but if I'm right, holy fuck, the risk reward is like 1 to 10, 1 to 15, right? I mean, you're risking 18 points ish to make 200, roughly 200. I mean, that's enormous risk reward. So, I mean, are you going to be winning every day, having huge winners every day? Probably not, because it's very, very hard to find the reversals. But having these pivot points could give you a massive edge in the market. And along with the fibs that you learned about in the market for beginners class, using these for take profit areas and stuff like that will help you maximize profit. Keep your entries, at a reasonable level without too much drawdown. There's chances are if you're going for a reversal play or pretty much any play, like you'd have to get somewhat lucky to not see any drawdown, because there's pretty much always at least a little bit of drawdown, which is okay. It doesn't mean the trade's a loser. There are certain signs that you need to look out for to tell you that a trade's a loser and that you need to get out and you need to protect your money. But sitting in drawdown for, 10, 20, 30 minutes, it's normal. Like it does happen. Sometimes you got to sit there and have a little bit of patience to get paid, right? So just keep that in mind. And, if you find yourself panicking in a little bit of drawdown, let's say you were in this trade and you were looking at the 1 minute chart. Oh shit, what day was that? Oh my god, did I just lose it? Where was it? Is it this one? Oh shit, we're back on the 15-minute. Man, am I really gonna get lost here? Whatever. The point being, on the 1 minute, that looks scary, right? Like let's say you took this trade. No, that one didn't really have any drawdown if you landed on that pivot point. Let's try to find a good one here. Probably have to go back to the 15 minutes. Sorry. I'm on not that much sleep. And damn, these are a lot of lines. Let's see here. Okay, it was right here. Yeah. So on the 15 minutes, this looks fairly innocent, right? But okay, this is the 25th of January. On the 1 minute, now we gotta scroll back to the 25th of January. Why didn't it just keep me there? That's the question. The 1 minute won't even go back that far. So we'll look at the 3 minutes. Hopefully this one goes back that far. Yeah, okay. So on the 25th of January, our 15 minute is looking pretty good, right? It was just a little wick. But on the 3 minute, fuck, let's say you had your limit orders right there or you market bought, boom. Let's say you got filled around 35. Man, this just ripped up super fast and then it lingered for, another full 3 minutes. And then over here, you know, chances are if you're not in the right psychological state and you're trying to play a reversal play, NQ likes to sweep levels. It's just what it does because it's absorbing stop losses, take profits, and trying to shake people out, right? So it will sweep a pivot point before it reverses. So sometimes when you're watching me day trade live, I'll get in right at a pivot point thinking it's going to obey just like this. And then boom, sure as shit, you get a sweep for 18 points. And I'm going to be sitting there, well, shit, is this just a sweep? I'm gonna be saying this out loud. Is this just a sweep? Oh, is it a sweep? Da da da. And then chances are I'll wait. And then if the losses get too big and it's not just the sweep, then I'll take the L, right? But sometimes you gotta sit and draw down. Is my point, right? Especially if you're going for reversal plays. But if you could sit in the 5-6 minutes of drawdowns to maybe 10 minutes, then fuck me. You just got a payday and you're chilling, right? And as you can see here on the way down, boom, it hit this pivot point. Boom, bounce back up. But the trend was still strong, so it kept on going for another day, right? But, if you can't hold overnight like most of us can't, then you're just looking for, the finish of the trend on the day, right? So typically when a drop is this hard, it's going to see some relief, but then it's going to continue because that's the trend, right? The trend continues for quite some time. This is 10 o'clock. It continued for, an hour long. And bear trends tend to be shorter than bull trends, but the bear trends move much, much faster. So if you catch a nice short, I mean, personally, I would probably hold most of my position for a massive move. What you could do is, on the first initial move, see a green candle forming, you could take some profit. You know what I mean? But if you want to maximize profits, have giant winning days to pay for your losing days, then sometimes you got to sit there and you got to be patient and you just got to fucking tell yourself that, the trend's going to continue, or if it doesn't, then I'm going to get out at this point, right? So this was a big drop. The 50% point would probably be a good indication that if it breaks above the 50% run, like 50% of this downward move that just happened, like when it was bouncing like this, if it retraces 50%, there's a good chance that we're going back up. So that would be possibly a place just to, stop out and take profit, especially if you got in like up here or around this pivot point. You're still making good money. You're not making all the money, but, if you do hold and it doesn't come against you, then you're making, a substantial amount of ticks. So with that being said, we kind of went over how to plot pivot points. We did it mostly on the 15-minute because higher time frames tend to be more reliable than lower time frames. And it just helps keep the chart a little bit cleaner. You could do it on lower time frames. You can do as many lines as you want, but just try to keep in mind that higher time frames are more important and are more likely to obey than lower time frames. So if you wanted to do lower time frames, maybe change the color or something like that. But let's plot a few more just so we can get some good ideas of where a better understanding on how to plot your own pivot points, because you're going to be doing this on your own. So what do we see here? Boom. A bunch of consolidation, super annoying, but it really struggled in this zone, this area, and it didn't really obey it for days to come, right? This is somewhat of a weaker level, right? So chances are we probably won't plot anything over here. We could plot something right here because it wicked up, but at the same time, this seems like a much better level because we see a move right here. It bounced off of right there. It swept it right there, which is okay. Another green bounce right here on this little green candle. And then we also see, moves over here where it held the support right here, dumped through it again, and boom, it bounced off of it, double topped, and then reversed, right? So this is a fairly strong point. So we could definitely plot this one. And you could do as many as you want. Honestly, it's not a bad idea to put one right here, especially somewhere in the middle, because it did hold this, swept it right there, but then it top ticked right there and then held here, and then this didn't really do anything, and then it held right there again, right? So this is actually a pretty good pivot point right there. So we could definitely plot that just so we don't have so much blank space. And when we're in the trade, we want to be thinking about where we're going to be exiting, or, if we're not in the trade, then we're going to be thinking about where we're going to be entering. Let me just plug in my laptop really quick. Okay. So yeah, we got that point right there. And we're gonna be wrapping this up because don't want this to be too long. We just want to give you a bunch of information, and you could rewatch this as many times as you want. So let's see this. Boom. We got another level right here where it topped. It held right here. Topped again, held, and then it swept through right there. So that doesn't really matter. But it doesn't have to be exact where these lines are, but you want it to be in a relative area where it's been obeyed at least a couple times. If it's one time, then like right here, I mean, did this level get obeyed? Really? Not really. I mean, the one-offs, like right here, I guess this was somewhat of a one-off, but technically not because it touched. Chances are this is a key level, even though it was kind of like a one-off, right? So you do want to plot them just because, if the market hasn't obeyed it before, then, I'd say, I mean, this isn't like facts or anything, but in my head, the way that I think about it, if it has not obeyed it or hasn't ran through it multiple times, then chances are, it's gonna stick. Like, I would say this is a pretty key level, like significant level. So I'll make it a dark green because, like, my bullish bias right now, I think we're going down for at least another day or two. I mean, we have news coming up, so I mean, anything could happen. But we hit this major level right here. So if we break through here again, I mean, what am I thinking? I'm thinking we're going straight for this liquidity at 237, 239-ish. And that's where, we're potentially going to see a massive bounce and a reversal. So if I don't catch the shorts, then I'll be looking in this area to take the reversal play. just like we did yesterday, but at this level. Because I mean, this is also a significantly stronger level because it's been tested so many times. But this is a level that's so far away from everything else that I think that it has a pretty good chance of holding. And if that doesn't hold, then this would be the next one, and then so on and so forth. But yeah, I mean, you could draw as many lines as you want. I'm not going to go out that far today. But I guess because it could be in play today, actually, we could plot it right now. So I mean, this is a pretty nice level. It topped, top, boom, boom, boom. It happened so many times that we'll slap a level right there. But it's not as significant as this one, in my opinion. So we'll make it a different color. I like to keep my ultra significant levels a much different color than the rest. Okay, so another key level right here. If this does not hold, it might want to sweep down here. Just another 60 points. That could happen in just a few seconds with NQ because when it drops, it drops. So now, boom, we got our major points. And if it breaks through here, then we're looking at this level. This is a pretty significant level. We got boom, boom, tap, 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 sweep. We got a flush right there, and then we got another tap, and then two more taps-ish, right? So if this level doesn't hold, chances are we're going to be coming down somewhere around there. And that's pretty much all we need for today because I don't think we're going up, in my opinion. But just in case, we could plot these highs as well. But if we get up here, then this is starting to get into uncharted territory, especially if we break the all-time highs. But okay, let's do a hypothetical situation right here. Let's say we just completely rocket straight up to all-time highs. Okay? Do you think we're going to break all-time highs right away, or do you think we're going to bounce off of it? Who knows, right? But if we do bounce off of the all-time highs, chances are we could see a significant retracement, which is about 100 points from all-time highs, down to this level. Especially if it's a crazy strong bull run, then we could definitely see, a 100-point pullback. If it just mongoloids up there, within a few hours, just boom, straight green dildos all the way to the roof, then I would expect a significant pullback after sweeping the all-time highs to come down, about 100 points to this level, and then, if it's that bullish, chances are can curl back up and just keep on mooning, right? But yeah, I mean, you gotta look, especially when you're playing off pivot points and stuff like that. You gotta look at the momentum because in this trade, well, let's say we missed the short and now we're just watching it, right? And we're getting impatient because we want to get in a trade, right? And patience is just a hard thing to conquer. So let's say boom, it dumps off a cliff. Oh, that could be the bottom, right? I'm gonna take longs. Boom. This is the max profit you're gonna get. So even if you have the sickest entry, 914 to 959, you're making 46 points, right? That's with perfect execution, which is nearly impossible. And then you get fucking ran through and you lose all your profit and then something, right? So you in order to be a successful trader, there has to be some other methods to why you're taking a trade, or like some other train of thought, right? Like looking at this, boom, tapped all-time highs, dumped off a cliff, just a monster cliff, just an enormous rundown, 200 points in just an hour or two, right? So at this point, you're like, wow, this is a bearish day, right? So when it's down here and it's bouncing but not really going on, and then oh, it sweeps up, right? And then it hits, this pivot point that we don't see for another few days. But this key area, right, where it showed some support, it breaks through that bottom level just to sweep a little bit and then dumps off a cliff, right? So in trading, you always have to be looking at price action. It doesn't matter what you think. It doesn't matter what the news is. It doesn't matter any other factors besides what the price is doing, because the price will tell the story. If it's not mongoloiding up, like with giant green candles like this, then chances are, there's a good chance we're still in a downtrend, right? And these downtrends can last for hours, days, just like right here. This was days. So you could take short scalps, but do you want to risk it? Like yesterday, I took some long scalps on a short day before that fucking sick reversal play. I got ripped up because I was trying to take long scalps and I didn't take profit, and then it just reversed on me and dropped, in seconds. Just ran right through my entry, couldn't even get out of break even, and it just dumped, and I took a loss. Luckily, I took the loss and was able to recoup later, because sometimes, trading is hard. It's human nature to not want to cut losses or accept that you're losing, but it's a necessary part in order to survive in trading. So, it's something that everyone should practice consistently, is, trading either with a stop loss always and risk getting wicked out, or go with a mental stop loss and just make sure you fucking have the discipline and the mental fortitude to click that sell button or exit button when you're in a loss and it's going against you hard. Because if you're still holding this, you're not coming back. It's not coming back for you. You're done. If you held this, your account's toast. It's a 300-point drop, right? If you wanted to hit a scalp, maybe it's going to curl back up and break all-time highs. Well, it didn't, and you got rolled. So you got to look at the momentum, the market sentiment, and where it's bouncing off of, and just all around, price action. If let's say this fucking ripped back up to 50% of this run, like this level, then this could be a possible short re-entry. But if it breaks a little bit above this level, I'm bullish, because it retraced 50% of the run. And what does the market like to do? It likes to chase liquidity, right? What did the market do? It took, I don't know if there's liquidity there because it's all-time high, but, it took high liquidity or whatever's up there, came back down, ate all this liquidity because, this was a low of one of the days. And then, the market likes to chase liquidity, so it's safe to assume that this could be the reversal. So maybe you get in the longs, but nope. It doesn't want to go back up, and it dumped off a cliff. So, I mean, the thought process is somewhat valid, but without paying attention to the price action and, like, the size of the candles and, like, how it's moving and, basically whatever else is happening at this time, it's going to be hard to know if your longs are going to work out, right? And chances are you won't know until it's too late, because these drops are just vicious, right? It lingered there, couldn't break through, swept it, and then it dumped. I mean, it's a hard thing to know whether it's a pullback or if it's a full-blown reversal. And, I was reading a book, and they say that you need to have extreme, just amazing technical analysis to be able to tell the difference. So what I would say is it's better safe than sorry, right? Either put a hard stop or, take a scalp. If it's a bearish day, long scalps are a good idea. If it's a bullish day, short scalps could be a good idea, but only scalps, right? It's not long-term holds, unless you're playing the reversal. But in a situation where it's all-time highs, insane volatility down, it's hard. The chances of catching a full-blown reversal are slim. But, I mean, what I like to do is I like to keep trying it. And, I get paid for it. I take a lot of losses. I go through a lot of suffering. But, they do pay. So if you could potentially, work on your market psychology to trade like that, I mean, it could work out very well for you. And, there's a ton of traders that try to do this, but they don't have the market psychology, so they're never profitable. So now that you know the pivot points and you know what the market likes to do, it likes to chase liquidity, you just got to work on market psychology, because that's you can know all the strategies in the world and it doesn't matter. if you don't have the market psychology to sit through the trades or sit through the strategies. So that's also what we're going to be focusing on in these master classes, and we will become the best traders to ever be in the markets, and we will be the sickest retail trading mafia in the world, and I believe that. And we are still in the beginning stages. I'm not sure when you're watching this, whether it's months from now or the next day, but we are going to be a massive, massive community, and we are going to bring the 5% trader profitability ratio down to, hopefully 10%. I mean, I don't know if we can get that many people in here, but I mean, it is very possible. I mean, if we could make 5% more traders profitable, I think that is a huge, huge win. But of course, it takes years of chart time, hours and hours, tens of thousands of hours of chart time, along with, actively working on your psychology, actively practicing holding trades, getting out of trades, entering, realizing it's a bad entry and getting out, waiting for the better entry, just tons and tons of experience that, will just come through time and watching more of these videos. So with that being said, we know how to plot pivot points. We know that the market likes to chase liquidity, which we might have another more in-depth video on liquidity chasing later. But pivot points are, the ideal places to, enter or exit trades. And personally, this is my favorite thing. And this is all I used for a very long time. Now I'm using the standard deviations and stuff like that to help me, better gauge where to take profit, because taking profit is a very difficult thing to do. Not just, cutting losses, but also taking the money when you have it. It's a difficult thing to do, and it's trading, hardest job in the world. So we can only get better slowly, and as a team, I believe we can grow faster and stronger and better together than if we did it on our own. So that being said, boom, here's the pivot point lesson. Damn good Kyle, the Dawn of the Damn Good Trading Mafia is out. Peace. Also, feel free to send me messages with questions anytime you want in Discord. Bye-bye.